Markets party like it's 1999 as big tech crushes to new highs. How about that consumer? Downright giddy. Good thing or bad? Stay tuned, we'll talk about this and much more. Hello, this is Michael Loftus for Wealth and Wisdom TV. First up, don't forget to subscribe below. Also, you can click show more for additional comments and also links to articles, access to my calendar if you'd like to schedule something, and also our other contact information to send any questions. Speaking of questions, here's a question from one of our viewers last week. I missed the recent rally, thinking it was short-lived, but it just kept climbing. I feel as if I buy now, it's just gonna turn. What should I do? You know, great question, okay? A couple things. One, we still are in a bullish uptrend. So, opportunity's still there as you look at the charts. We'll discuss that today. But you gotta be careful. Don't go all in. I would keep some cash available as you see more opportunities. But I would dollar cost average, meaning slowly work your way in the market. That's exactly what we're doing right now with some new clients that came in the last few weeks. So let's get right to the numbers. Last week, Nasdaq was the big story, surging after a sluggish few days. Big tech takes off, no doubt about it. Dow and S&P also green for the week. So let's get to the big chart. First up, another all-time high. In fact, the 54th all-time high for the Dow. When we take a look at the chart here, as I said last week, at the top there, RSI, relative strength. When you're above 70, yeah, you can be overbought unless you sustain, and it's very bullish, and that's exactly what continues here. At the bottom, momentum continues to pull up. Now, on the chart, I'll have Michelle highlight this. I've got two channels. One is a clearly broken out channel, and then we have an upper channel there, okay, where we hit last week, and let's see what happens from here. Are we going to continue to go or pause? But again, it still looks fairly bullish, although coming out this morning, things are looking a little rocky. Going to the S&P, I'm showing this chart again because I think it's that important. Here is the influence of the Fed. The Fed balance sheet, pumping money into the system, keeping rates low, and look at the S&P. We know that in 2018, they're going to start bringing that down. That is the proposed line. What happens? We are going to continue to watch that. Until then, all signs again. There's your bullish channel. I think we got overbought. We did go below 70 on RSI, but then bounce right to it again. So we'll see. Again, big moves these last couple of weeks. I still feel that we are overdue for at least a little pullback, or at the very least, a consolidation. And the same view here in the weekly view. Overbought, but momentum looks good, and you broke out of a long-term channel. So another good sign. But here's not such a great sign. So last week, the market surged, right? And we know it was big tech. So the S&P is cap weighted. So those big cap names are keeping the S&P driving up. So here in this chart, I show the S&P in black, and then I show the equal weight. So big tech gets an equal weight. Okay, and look at the divergence there. That's that breadth. So that is a little bit concerning. Can big tech keep on moving us forward? Yes, it can. But will this eventually catch up? We'll continue to watch. So Nasdaq, the big story last week. Again, I look here. You still have some move to run. You've got some big tech names coming out this week with earnings. So here, I think, again, a little choppy this morning on Monday morning, but we do have an opportunity to go up here after that huge surge. And I think when you had those big tech names, it already brought up some of those names last week that have been lagging. Okay, so now, is there an opportunity? You have to look individually. It is difficult to find opportunity in that sector. So how good was last week? How about the best day since 2009? You can see here, up almost 3% in one day. So that is, I mean, we haven't seen that kind of stuff again since the 90s. Big numbers, big surges last week, and wow, this is that melt up we talked about a couple weeks ago, and we are definitely seeing the melt up now, which is a little bit interesting. So more to watch on that. But see, I'm contradicting myself today, I know, but this is what I have to do. You got to look at all the charts. Here's the Nasdaq monthly, okay? And look at that line. We were basically 16 years flat. So we're just breaking out of a 16-year flat consolidation area. So, you know, when you look at that, you say, sure, this could keep going, and definitely big tech is what's driving this market. Market breadth, we're looking here in the short-term 50-day, you know, definitely trending down. We see that in the equal weights. 200-day, a little more solid, but are moving down a little bit in some areas. But again, above 60, really strong, and we continue to be there. Treasuries, we've been talking about this. We broke through some serious resistance last week. That 242 number, and we closed there on Friday. Let's see what happens. But yield spread, come up a little bit, 0.83, so not too much concern there yet, but below 1 is not what we're looking for. Now, let's get to our sector. Some of our opportunities when you do look here. We've been talking about these three the last couple weeks. Banks. Banks have been driven by the rise in yields recently. Below, you see the correlation. It's a 1-to-1 correlation right now with treasuries. As treasuries go up, bank stocks, or in this case, the index, is going to follow. So we still have some room to go here, okay? Momentum's pointing back up. And you look at this, what is the opportunity? Because here you say, okay, we're looking pretty good. But let's go back and take a look at this chart. Again, I take the monthly bank and go back, and guess what? We're still not at all-time highs from before the crash. And if you look there, I've got the line, and then I added in a percentage, 24% upside just to get back to previous crash numbers. So, you know, I like banks here as long as treasuries keep moving up. We're here, and you've got a lot of really good upsides. One of the few sectors that is not at all-time highs. Next one, small caps, been talking about this, had our breakout, our bullish wedge, and again, showing there looks pretty decent, and we are starting to pull up there on momentum, so do like that. Now, last week we talked about healthcare here, did not turn out so good last week. Down, 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 still within its channel, but again, I like healthcare long term. A lot of noise on the healthcare front, but this so far, this quarter has not worked out. But again, we're not day traders. We're in there for at least the quarter looking for that momentum. And again, sectors have been a real important part of our overall portfolio performance this year. Let's get to the data. Last week, another quiet week, lower pending home sales, but up. Durable goods, new home sales, GDP, we're going to talk about that in a second, 3%. Yeah, great number, no doubt about it, especially when everybody was thinking about the issues with the hurricanes and then consumer sentiment. Wow, look at this number right here. I'm going to go here first on the chart. We're at all-time highs on consumer sentiment. Now, that is a contrarian, okay, view there. So I'd be careful with that one. I was going to add a bunch of slides here, but I'm going to do a video on this because the consumer is not participating the way you would think. Now, here's an article from this weekend. Americans are already showing signs of running out of debt or maxing out their debt. Now, in this article, it talked about the GDP, and I think the most important thing is it talks about, okay, in this case, the top 10%. Okay, because consumer discretion's going up, staples are not. And the top 10% is keeping this market moving. Middle class, lower class are continuing to struggle, and that is definitely a concern for us. So from here, wrapping things up, AAII, pretty much the same view, a little bit of ads on the bear side, but really neutral across the board. Fear and greed, last week we're at 90, this week we're in the low 70s, so a little bit lower, not too surprising because we did have a bit of a consolidation on two of the big markets, of course not the Nasdaq. Signals, short-term, mid-term, long-term, all positive, which continue to have us fully invested. So, you know, as always, we are invested, we are looking, and I know everyone hates this term now, but we are nimble. just in case, and that's why we had some cash here, if there's some opportunity to take advantage of that, or from a risk factor. As always, we appreciate you watching. Michael Loftus for Wealth and Wisdom TV. Thank you so much, and make it a great week.